and venture capitalists. And in this point, they look for a variety of factors when evaluating businesses to invest in. I believe we had Benson asking about some of these factors that equity investors consider, and I'll go through that within the presentation. So the thing that you have to understand about equity investors is that their goal is to maximize their return on investment while managing risks, because all businesses have an aspect of risk. So equity investors provide expertise and connections, as well as growth opportunities in the future. However, equity investors acquire a stake in the business. Therefore, them having a say in the operations of the business means that there's a reduced element of control by the business owner. Also, equity financing usually takes longer to secure. We are roughly putting at roughly 3 to 6 months. And I mean, when I say 3 months, I mean 3 is when you're pretty lucky, and 6 is quite the standard period. So what do investors look for in a business? To answer Bernard, and also to touch on what Lulu Kahai had asked earlier, equity investors look at the strong management team. Depending on how early you are, because you don't have enough information, you don't have financial statements, you don't have management accounts. Equity investors over here typically will be looking at the founder, the ability of the entrepreneur, and the strengths within the entrepreneur. So typically, they won't be funding your business, but they will actually be funding you yourself. Also, these sort of investors look at the market opportunity. They want to see that the business you're operating in is growing or serving a large market. So therefore, this signifies a significant potential for expansion. So depending on how early or late you are, financial performance is also something that equity investors typically go through. I mean, they analyze your company's financial history, projections, looking for metrics, and the key metrics that they look at are revenues, healthy profit margins, and a clear path to profitability. On a clear path to profitability, they look at your unit economics, and by unit economics means how you are able to scale rapidly at a lower cost. And that's where the advantage of having a tech business actually comes in. So equity investors also look at unique value propositions, and these are products or services that address a specific problem or need in the market. Bernard, I believe you're doing something on leveraging data analytics. So if you're able to actually show how data analytics can actually lead to more improvement in profit margins and growth and even customer experience, then this is something that they will be interested in looking at. Also, they look at the sort of traction and milestones that you've achieved over your business within a certain period of time. So typically for an investor will actually look at the following process when deciding to make an investment in you. So first of all, the investor needs to understand what is your funding ask. For example, over here, Lulu mentioned something about her business being a bit capital intensive. I mean, using all those equipment. So over here, you'll have to put in a definite ask and say, probably you need 2 million Kenyan shillings for this and this, or 5 million or 10 million Kenyan shillings for this and this. So how an investor will actually approach this is that they will look at the business proposal that you've actually developed against their certain investment criteria. Okay, then they will conduct initial inquiries with you, and they will do evaluation of the business. So I'll take you through a small exercise, or rather a small process of how evaluation looks like. So, and they also consider the financing structure, meaning that they look at how much debt you have in your business as compared to the level of lack of debt that you have, and this actually plays into them making a decision about you. Also, they will do external due diligence, meaning that they will consult other people, for example, the credit reference bureaus, to understand where you actually stand when it comes to loans that you've taken in the past. I mean, they look at some of the customers that you're actually servicing. For example, if you have good customers in your business, if you have good corporates who you're serving, then this actually plays a lot into them making an investment into you. So also, equity investors will want to negotiate terms with you. They like to understand the stake that they're getting from your business in exchange for the consideration that they're giving you. Typically, they may ask for roughly between 5% to 10%. And also this depends upon the sort of valuations that you go through. And for me, it's important to mention to you that before you approach equity investors, you need to have somewhat a valuation done on your business so that you can be able to understand what value you're providing and how much it is that your business is actually worth. Okay? So valuation, how much is your business worth? So valuation is the process of determining the worth of a business. And these are the certain considerations that you need to take note of. Why are you valuing your startup? Is it for fundraising or just to know, or other reasons? In most cases, it is actually for fundraising purposes. So also other considerations are, who is the potential purchaser or investor? And is that a financial or a strategic investor? A financial investor will just be interested in acquiring a stake in your business, then selling that stake at a future point in time, whereby your business is at a higher valuation. Rather, a strategic investor will help you get the connections within industry and see to it that you actually gaining more traction and milestones within your business. So, as I mentioned earlier, investors will typically want to go through a due diligence process. So this involves just the following key steps. First of all, for the entrepreneur, it's important that you identify potential investors and apply for that funding. Next, you meet the investor who will have these initial discussions with you and perform that, get that additional information from you. Next, you'll have to sign a term sheet. After that, due diligence documents are provided, such as your financials, your customers. If you have any IPs in this case is intellectual property, and then you'll have to review and sign new contracts with these investors. After that, you get the disbursement of funds, and typically nowadays you find that equity investors give money in tranches. They won't just give you at once, but they'd rather say, I'll give you this amount this time, this other amount after 2 months after hitting some certain milestone, etc. And needless to say is that there is an element of post-investor support, such that you're there to actually report your progress against key milestones if necessary. So
thanks, Michael. We have 2 minutes left.
Okay. So I'll share this with you, but let me just get to the key value drivers for businesses to answer what Bernard was asking initially. The physical assets are one key driver, intellectual property, the people, your team, customer contracts, if you're serving quality customers, and also your market size and your growth, and also the competition in your industry and in your market. Also, they like to look at any significant barriers to entry. So I think, Rachel, that given the time constraint, I should have mentioned something about valuation methods. But I mean, and this is the reason why we're having these conversations, so that we can pursue these discussions and actually train these small businesses on how to go to market, how to perform valuation methods, and how to approach investors. So I'd like to request that we do another series on this, so that we can have this information provided to the businesses for them to be able to actually see what is there in the market, and for them to be actually able to grow their businesses and to learn more about investors and how this occurs within the market. Thank you.
Yeah, thank you. Michael will definitely organize a session specifically to discuss equity financing. Thank you big time for that great conversation. If we still have unanswered questions, we'll also share that with you. And be sure that your response will be sent to you. So now we thank you, Michael, and do have a great meeting. Now I'll invite the Deloitte team, Paul Muturi and Laban Chege, to take us through financing options. And then after that, we'll have Maurice talk to us about grants, and then Benson talk to us about debt. So Paul, to you.
Thanks a lot. Can everyone see my screen?
Yes, we can. Maybe you put in full screen. Yeah, full screen.
Okay, sure.
Yeah. Slideshow or at the bottom. I don't know which one works for you. Yeah, we are good.
Okay, so I think Laban will start, and I'll join in the middle of the presentation.
Sure. Thanks, Paul. And so we'll jump straight into it. As Rachel said, we need to make it short and sweet. I think today is a day where we need to have, it's your day, the entrepreneurs. So we would want to hear more from you than even you're hearing from us. But again, just to set the context, we are going to sort of summarize the key sources of funding for your businesses. And it's been a great morning to listen to Ephraim, Bernard, Fade, Lillian, Lulu, and Wycliffe. And speaking of the various ventures they're running, and also running us through what the expectations are for this session. And we do hope we can speak straight into what you're looking for. Broadly speaking, we do have two sorts of financing for businesses. There's a debt and the equity. I want to believe Michael has dealt on the equity. We are going to even delve deeper into it. And even at this point in time, we do understand. You understand what's financing and also what's capital. I think it's just good to appreciate that it's a great task raising businesses from the ground to increasing levels. We do also understand that as a business evolves, so are the challenges, and one of those challenges is fundraising and looking for capital. But also, it's important for you to understand what kind of capital you're looking for. Like we said, we do have debt, equity. We also have the hybrid versions of it. It can be convertible, semi as well, and some of the major sources that we do have comes from the commercial banks. I mean, in a country like ours, Kenya, we do have to agree that the major source of funding definitely is coming from the banking sector. And you talk about the banking sector, these you're referring to the major banks and even the MFIs, microfinances. And also it's good to appreciate that we do have the traditional forms of banking. This is the brick and mortar. This is for the likes of Equity, KCB, National Bank, etc. But in the modern day, we do have other institutions that are also lending through online channels. I know we've heard about the digital lenders who currently are going through regulation by CBK. So those forms the avenues for us, for entrepreneurs, where you can quickly get a facility perhaps to run your entity. But just before that, and since we know, you understand that we have banks doing it, I think the key question that you need to answer here as entrepreneurs. Do you understand what the lenders are looking for? You know, that's a question that you're going to be discussing. Other sources, speaking of the personal savings, I want to be sure that most of us have at some point financed our businesses, especially at the nascent stages, through money from our pockets. This could be money that you've raised from several sources over various times. We also have raised money from family and friends and incubators as well, and also from the chamas, from grants and from other government initiatives. So as we look into the banking part of it, the question that I was saying that we need to understand is, what are the lenders looking in us? Now, touching this from our banking perspective, the first thing that a bank or any commercial bank want to understand from you is whether you understand your business. And now, understanding here, we want to narrow it in terms of, do you understand your working capital? For you to run any business, you definitely must have a certain set, or you must have a form of financing that's fueling your day-to-day needs. Call it the working capital. You must have debtors, you must have payables, you must have suppliers as well. The key question is, do you understand how they all integrate, and sort of what do you require in terms of working capital to run your business from a day-to-day? The other thing that you need to understand just before you even approach this lender is, what's the nature of your cash flows? We do understand that we have peaks and troughs. Our cash flows can be described from when you sell. How soon do you realize your money back? So that's a key question that you need to answer even before you basically touch base with a bank or any other lender out there. Another question that you need to critically think about is, what market are you addressing? And even so, what's the business opportunity that's there in your business? So specifically, what you need to do is, you need to define your business in a very articulate manner and understand it even before you approach this lender. And what can you do to increase your chances, or rather, to be able to become more attractive to a bank? As a business, as entrepreneurs, you have to understand that keeping records is really important. And I know when you speak of records, sometimes it can become a complicated subject, but also it can become a very simple thing. How do you run your schedules? As simple as when things are supplied to you, do you have a stock taking aspect of it? Number two, when you sell, do you indicate that you have made a sale? And number three, do you have an active payables record in your business? You know, those simple records are very important for you. The banks are going to ask you for that. And essentially, since I know we are dealing with most of the SMEs, we may not be able to get those sophisticated software that can help you manage your records. But again, making use of simple records as Excel, and which is, I want to believe most of us can be able to afford the Excel, even Word, or even other simple, even a book itself, just an exercise page, and having your records well put. That's a one step for a bank to believe that you are in charge of your business. Something else that we need also to pay attention to for us to become attractable to these lenders is, they're also going to look into a historical ability to repay a loan. I know we have heard about CRB for quite a long time, and most of us think it's an obstacle for us to achieve our financial goals, or rather to get this financing. But truth be said, it's a very important ingredient to a bank or to any lender out there. They're going to subject you to your previous historical loan repayments. And what they want to see is if you have integrity, if you have a character. We all know banks speak of the 5 C's, the 5 C's of credit. I mean, they speak of the character, they speak of your capacity to pay, character, which is now reflected through how you've been repaying your historical facilities. Yes, we have heard about our government and its initiative to wipe out to delist those who've listed. But essentially what you need to know is your record will be there and it's going to reflect on you in terms of your character. I think another thing they look at is the capacity. And I think the capacity can be addressed through now the records that you're keeping. That's something else that we are going to speak about in a short time. Another thing that the bank would want, or a lender would want to hear from you is, have you defined the problem that, or rather the financing gap that's existing? You know, what lenders want to avoid is a scenario of you divesting the funds. You have heard of cases where people essentially will go for facility from a bank or from any other institution, and they don't implement what the actual need for the funds was, or rather they divert. So the banks will listen, or the lenders will listen to you, and they want to know if you're able to define the problem that you want to solve and what's that specific gap that's existing, so that they can be able to monitor the proper use of that loan. The next one is that the banks would want to know how you're utilizing your bank accounts. The critical thing is when you're telling someone a story about I make X amount, I make Y amount, I make Y amount, I make Z amount, they would want to see this reflecting in terms of the cash flows. So what would advise the entrepreneurs that you are, make sure that you bank with a lender, especially the banks. Let your payments, or let the payments that are made to your business, let the payments that you make be reflected in a certain bank. Because you'll hear a lender asking you, can you give us your 3 months or 6 month statements? So most of us will have a challenge trying to give that, because you do transaction in terms of hands. And that one will not appeal to a lender. You can do it through M-Pesa, you can do it through the bank. So the key thing here is utilize the channels of banking, that's either be it M-Pesa or the bank, for you to have a chance, for you to have a proper chance of speaking to the nature of your cash flows to a bank. Having said that, I think those were key points that would sum what these lenders indicated here would be looking at from you as a borrower. And so with that, now we can proceed just to appreciate the merits and the disadvantages that comes with this sort of financing. Like we mentioned, we do have the banks, and like we indicated, we have the traditional forms coming from National Bank all the way to Equity. We do have also so many online businesses, and these ones the first stop for any business for any business that's looking for financing. They do have a product packaged into servicing your needs. And also, most importantly, we also have other lenders, especially the IFC, who as well have specific products for entrepreneurs, which are channeled through the banks. So it's for you to go and speak to a banker and maybe speak to what kind of products do they have for you. The next one, we do look also at the advantages and the disadvantages. As most of us are aware, what banks have is they do have unsecured loans, and those appeals to most of us as SMEs, because we don't have the title deeds, we don't have the logbooks, but at least we have the nature of our business, which appeals to, which is lendable in terms of your cash flows are okay, your records are right, you understand your working capital needs, and you have a better utilization of the account. So you'd be able to get these unsecured loans. About interest rates as well, I think we all have understood or have gotten the aspect of the banks now are doing what you call risk-based pricing. What that means is you're going to get a rate that's community rate to the risk profile that you display. So in essence, have the right historical loan repayment that we spoke about. In that way, you're going to attract a better interest rate. Some of the disadvantages is for bigger tickets of loans, definitely you need a logbook, you need a title, you need a security in the form of a title deed, collateral, or whatever sort of a security that it is. And also sometimes you have to think about the nature of the interest rates can be floating. Floating means as the central bank is adjusting its CBR or central bank rate, there's going to be a correspondent increase or spike in the interest rate that perhaps your loan carries as well. So those are some of the disadvantages that comes with SME loans. Family and friends, I think we cannot overemphasize about this one. Most of us have benefited from this one. I think the key thing is just to know they may not give you a big amount, or rather the required amount of loans. And also another thing is they are likely to be risk averse in terms of they may not understand. Unlike a bank whose mainstay is lending, I think family and friends, their mainstay or their main objective is not lending. They have other things that are running on the side. So you have to understand your business and also check on its profitability, because friends and families may not really understand the various cycles that your business is perhaps going to go through. So I think we've spoken about family and friends. We've talked about the advantages and disadvantages in a nutshell. And definitely that's something we can share the presentation with you for you to go through. The same way we spoke about personal savings. I mean, there can be from many sources. These can be bonuses that you have earned at work. There can be gifts and inheritances as well. So this also forms a good source of financing for businesses at their very nascent stages. Then the chamas, and this one also, we also have to look at the circles. I think the benefits that we get from the circles and the chamas is first, I think they have a defined interest rate. If you're talking about 12%, it's 12% all through. They don't have a matchmaking process where whenever there's a spike in rates as well, they're just there as no. Them, they have a fixed sort of rates. I think what you need just to understand is this can be the easiest form of financing, but also requires you to know the stage at which your business is. Because for chamas, I want to believe they may not be well capitalized to meet all the needs that your business may require. However, it forms a very good source of financing at the earlier stages of your business. So then we're going to have Paul taking us from the government initiatives and also discussing other elements of the source of funding. Thanks.
Okay, thanks a lot, Laban, for taking us through that. And before I jump into the government initiative, maybe I just want to reiterate what Laban has said, especially in terms of, because I remember one of the questions was in regards to if you do not have collateral, what can you do to be more attractive to a bank? Financial records is a key requirement, and it's a key, I would say, advantage in regards to not having collateral. And I'll give you an example. So I've been lucky enough to work in various different industries. So one of the industries that I worked in was actually involved with the Bill and Melinda Gates Foundation in Rwanda. So what they were looking to do was actually to help farmers have financial records, so that, and this was through a platform called the Smart Nkuruganze system, and also the Coffee platform. So how this platform used to work, farmers could buy all their inputs from the platform, and also they could sell their products from the platform. So what this does create is a financial record, and using that financial record, they could now go to local banks. This one was being supported by the Bank of Kigali, and be able to source for loans, which will be which now the bank will use their financial records that they can verify to be able to now determine the amount and the interest rate and everything else. So having financial records de-risks you, it reduces the risk. And as Laban has mentioned, how lending nowadays is risk-based. So having that as part of your requirement reduces your risk. So I'm also going to jump into government initiatives. So one key thing that maybe is a bit of advice is to the members here is to always look at the news in terms of what is happening in terms of the Youth Enterprise Development Fund, Women Enterprise, Biashara funds, National Microfinance, also in terms of what is being announced by the local banks, because what usually happens is some of these examples that I've given here, they cannot lend, they do not have the capacity to lend directly to you. So what they usually do, they will go either through a bank. So for example, Youth Enterprise Fund once went through Rafiki Bank to lend to youth. IFC is currently using equity to lend to SMEs. And some of the other, we usually call them development finance institutions, they're using local banks to lend to different categories, SMEs. ABSA is doing it through the I think Women Enterprise Fund is using ABSA to lend to women SMEs. So you need to be up to date with the news. You need to know what is happening in the industry. And once you know, for example, that IFC is has partnered with Equity to lend to the small businesses or to lend to the small SMEs, what now next you need to do? You need now to work into Equity or ask Equity what will be the key requirements, because majority of the time, the key requirements would not be as stringent as they would be if the bank was lending using its own funds. So that is one of the key factors that you need to know, especially when it comes to government initiatives. You need to always understand what is happening. And again, in terms of the advantages and disadvantages, it's usually targeted in terms of they have a specific person that they're targeting. And again, they also do some mentorship. I'm pretty sure you've seen mentorship trainings being advertised by the Youth Enterprise Fund. I know those are institutional. And also this, majority of the time, this funding is cheaper than what you'd get from other sources of funding, because their main goal is not only to earn interest, but their main goal is also to uplift the community. So in terms of NGO and grants, I know somebody will speak more about it today. So what I'll just do is I'll just mention a little bit about it. So when it comes to NGOs and grants, sometimes, as I mentioned before, they usually go through our local banks to now do the lending to the youth or do the or giving out the financing to the youth, because the local banks usually have the infrastructure to do that. Again, when it comes to sometimes I think you can do it direct application, but then I'll let the expert who's been invited to speak more about that. But then this one has more advantages and disadvantages. One key advantage is when it comes to grants, there's no interest rate majority of the time. Because this is just meant to help you uplift your business. If you're buying either stock or inventory, or if you want to expand or anything else, that's what this grant is for. And again, if you look at it behind, you'll see that the main aim of NGOs giving grants is again to uplift the community. So it is much easier to it is much competitive to apply for grants, because you will be a couple of people will actually apply for it. So again, when you're applying for grants, again, you need to now put your best foot forward. And again, I'll jump back to what Laban was saying. You need to have your financial records in place. You need to have you need to know your business. You need to know what it is that you're doing, what it is that what is the growth plan of your business, where you're growing, and you also need to know what impact you're making in your community in terms of your business. About incubators now. I remember one of the questions is in regards to business advice. So again, Deloitte recently did an entrepreneurship summit, and in this entrepreneurship summit, what we are looking at is just to link large SMEs to financing partners. And one of the key things that we key learnings from this entrepreneurship summit was the fact that some of these large SMEs did not know that you could get funding from other sources except banks. So, and that introduces me to this topic, which is called incubators. One of the key questions that has been asked here is in regards to business advice. So how an incubator works in regards to this, an incubator, if you apply for an incubator and you get into an incubator will now link a founder. A founder basically is a former, it's a current entrepreneur who's been successful in his journey, and his role will be now to give you advice on how basically to run your business. If it's growing a business, he'll tell you maybe you can grow a business this way, and this, I'm saying this because of this and this, and if it's in terms of decision making, again, they can help you now structure your business in terms of how the best way to structure your business for growth. So we currently have, these are examples of incubators that we currently have. We have Answer. So Answer basically focuses on early stage tech startups, and they usually do 100,000 funding global network etc. 100,000 this is about 10 million. We also have what you call Adiana Labs, which again focuses on early stage tech startups, and the funding usually from $50,000 and above. We have what you call Baobab Network, and this is an accelerator. Accelerator does the same thing as an incubator, and it focuses on early stage startups, the focus of solving problems in Africa. Again, a fourth one is Founders Factory Arena. Again, this is a global startup, and then early startups. What you need to know, this list is not exhaustive. There are various other incubators that are currently operating in Kenya, and it is critical for you as a small business to do research on the various incubators, and also to do research on where the various incubators' key focus is. I remember somebody mentioned, I think it was Bernard. He was talking about leveraging data analytics and AI for informed decision making as his product. I mean, just from that example, I can say that he falls under Answer and also Adenia Labs. So I mean, it is critical that you do research on some of these incubators. You find out what each incubator key focus area is. There are some which specifically deal with agriculture, which is food availability of food, and there are some which deal with the various different industries. Again, these are some of the key advantages and disadvantages of incubators. But one key advantage that I'll reiterate is the mentorship and support. If you have maybe one day, maybe one of these sessions, we should invite somebody who's gone through the incubator program, and we can talk about this mentorship and support in regards to how do you structure your business, how do you structure a business to be able to get funding from not only the incubator itself, from other sources of funding. How do you grow your business? What information do I need to factor in terms of how to grow my business, etc. You also get to network with your fellow founders. You know what exactly each fellow founder does and how to help each other. So this is key for me, mentorship and support. Even speaking of that, maybe just to add on to that, Deloitte is also doing something in regards to mentorship and support called Jengana Deloitte, where we invite businesses such as yourself to in like a workshop program, and the workshop program is run by members of the organization. They look at your business, they look at what it is that you're doing, and then they also do training programs on how you can improve maybe this part of your business. If it's financing, what financial options you have. If it's about strategy, what strategy can you use to grow your business? So I just wanted to mention that as an example. In terms of funding rounds, I've also been lucky to, I think this was actually mentioned a bit by Victoria Ventures, but I'll just skim through it a little bit. I've been lucky to also work on the other side of the business. And this what I mean is I was tasked with helping businesses fundraise. And the businesses, I worked in the impact investing space. So the businesses that I was helping fundraise were doing something in terms of impact. Impact is a sustainability development goals. We looked at grants, we looked at if it's financing, and if it's debt financing, we link them to the specific investors or impact investors who do it. So when it comes to the fundraising journey, it usually starts with how it usually used to start. You approach us, and then we will ask you for our financial and your financial records. And one key thing that, again, I reiterate what Laban was saying, in terms of the financial record, majority of the businesses that we work with do not have financial records that we would use, that we would be confident in helping them fundraise. So we used to have a challenge with regards to that. But if you had your financial records and everything and every other document in place, what you usually used to do, you used to give us the documents, and then you used to prepare what you call a teaser. So a teaser basically speaks about it's like a business plan. It's a one-page business plan. It speaks about your business in terms of what your problem is, what it is that you're solving, what is your business model, what is your market sizing, what is the impact that you're making. If you're saying that you are reducing poverty through improved food production, we'd want to see that in terms of how your business is doing that. And then we'd also do in terms of the funding. So you are requesting for this amount of money, and also this will apply to bank. The bank needs to see how you're going to use that fund. You need to already have planned how you're going to use that fund. It would be nice if you already have the figures on hand. Like you're saying, I want 300,000, and this 300,000, the aim is to basically buy this number of steel machines. It is easier to say that than just going to a bank and say, I want 300,000, and when you ask why, that's when you start figuring out the reason. So once you do that, then you prepare the teaser, and then you share to the investors who are in a specific industry, and then they get back to us, and then the next step is now to set up meetings between you and them. Okay, these are some of the challenges that I'm guessing you faced in terms of accessing funding and financing. Number one is for your side, as we've mentioned a couple of times in this presentation, is the lack of reliable financial data. Again, another thing that I mentioned is in regards to you do not know what other funding options are available to you except the normal debt financing from local banks. And the other thing is in terms of how to define your business in terms of, again, Laban mentioned about it, working capital needs, what it is, what is your working capital, and this is in regards also to cash flow, because one of the key things that banks will also look at is your cash flow. That's why the financial records are important. How much cash is your business generating, and is the cash flow your business generating enough to basically cover the interest and principal repayments when they default? If not, then most of the time the loan or the investment will be denied. And also another thing that I need to add on to this is why it's also important to have a mentorship and a mentorship opportunity, because what they will do now, they'll tell you maybe you need to structure your business this way, you need to structure it this way, then this is what will happen in terms of your working capital will improve or you generate more cash. Okay, so I've spoken about this a little bit in terms of what we were looking at in my previous, where I used to previously work with, in terms of how to pitch your business. This is basically speaks about a business plan in one page. So when you're speaking about a business plan in one page, I've gone too fast. You first of all need to say what problem it is that you're solving. And this is important because when you speak about the problem, now the investor will be able to, from his mindset, he'll be able to know that this problem has enough market to generate continuous profit going forward. So, and it has to be, majority of the time people usually advise that this has to be a problem that no one has seen before, or people have seen before, but no one has ever developed a sustainable solution for it. And then the next thing, we speak about what it is, your solution. How does your product basically solve this particular problem that I've mentioned up here? Another key thing is people. So when you usually prepare the teaser, as I mentioned before, we usually have a section for people. Now in this people, we speak about you as a business founder. What is your resume? As Laban has said previously, if you are in, if basically, if, for example, if your character, if you're known to be in CRB in terms of not paying a debt and all those things, it will usually appear here, because when people do their due diligence, they usually do diligence on the founder. And an additional thing in terms of the people, if you speak to investors, majority of them will say they invest in the people more than invest in the business. So if it's a new business that you're starting as a start, and you don't have basically a reputation of doing this and this, somebody will invest in you and not the business because they believe in your dream. And this is also what happens when you go to family and friends. Family and friends, when they are helping you with financing, they believe in you. They do not believe, majority of the time, they do not know about the business, but they believe in you and the dream that you're trying to interact. So it is critical for you as a business person to know that you are the key asset for your business. And in terms of also funding for not only your family and friends, everyone else will do invest in you as an individual. So if you have good character, if you have the sufficient resume and everything else, it is easier to source for funding through that. Again, profits. This depends. So some businesses usually look at profits. Is your business profit making? Some investors usually look at impact. So this depends on who it is that you're targeting. So again, it is critical for you as a business to define who it is that you are targeting in terms of the investor. Are you targeting an impact investor, or are you targeting a profit-making business? Again, depending on the two of them, again, it may be difficult, it may be competitive, because these sources of finance, the demand is greater than the supply. So again, this is where you put your best foot forward. And if it's impact investing, you expect that a lot of people will go for that, because these ones are not looking at profits. So again, if you put your best foot forward, again, it's easier for you to access the funding compared to other business. Again, a key thing also when you're speaking about investors, you need to speak about the risk, because there is no business that is risk-free. Even if it's as large as the Safaricom and as small as the kiosk, all those businesses have their own risk. And it is critical for you to, as an investor, especially when you're going to look for funding, to know what those risks is. This basically shows the investor that you've done your due diligence on your part. You know what it is that you expect, and you've also developed mitigation strategies for that.
Paul, I don't know. We have 2 minutes left.
Okay, actually, I'm done. So this is a conclusion. First of all, is just to say to congratulate every business owner who's in here, because and the reason for that is because for Kenya to change and for Kenya to go forward in terms of improvement, it is business owners who usually take the forefront of that. So and being a business owner is actually a brave journey. It's not a simple journey. It takes risk, it takes grit, it takes resilience, and it's just a congratulations from me and I guess Deloitte in terms of what it is that you're doing, and wishing you well. So if there's any question, I guess this is the time to ask.
Yeah, I actually have a question from Maria. Do we have incubators funding SMEs that are looking for like second level funding, like not early stage funding?
Yes. You see, it depends on the incubator. When I say incubator, when I say early stage startups, I do not mean the business has just started. This can be a business that has been in existence for 2 years, etc., but we consider it early stage startup because it's still growing. So we do have incubators that do that. In terms of a name, I'd have to do some research and then get back to you on it. Alternatively, what I can do on my side, I can get you a list of different incubators, and then I can do what the incubators are focusing on and what it is that they require, and then send it to you. Then you can share it with everyone.
Okay, that sounds good. Thank you so much, Paul and Laban. We'll encourage that the questions keep coming. Now we move to the next session, but we would encourage you, Paul and Laban, if possible, you remain with us till we end the session, if that works for you. So very grateful to have Deloitte team and share those insights. You know, I was surprised he talked about merry-go-round, and I was like, wow. We overthink financing while we have it closer to us. So that was quite something, reminding me about merry-go-round. All right, now we got to grants. All of you have been asking, I need grants, and Paul and Laban have spoken about it, when you need it, advantages and demerits of grants. So now we'll invite Maurice Otieno to talk about grants and then talk about the We Do project that offers grants to small businesses like ourselves. Maurice. So Maurice will take 15 minutes. You had shared a few questions, so I shared with him, so your questions will be answered as he goes through his presentation. Then after the 15 minutes, then we'll have Benson talk about debt. Some of you have applied for loans, so you'd like to know the status, also how to fasten. Now we've automated the whole process. We're not doing manual follow-ups. He'll talk about the Biashara app. So Maurice, we can have you now, if ready.
Yes, thank you very much, Rachel. And good morning, everyone, once again.
Good morning.
My name is Maurice Otieno from ASEC. I would like to say thank you very much to Laban and Paul for that very comprehensive presentation that also touched on the grants, which probably I was supposed to talk about, but I didn't have any my presentation. But just to add on that, and also regarding the question that Rachel has talked about that have been asked by the entrepreneurs, they all revolved around how do I find, and then as I introduce, I think I will also share my screen. So they revolve around how do I access, how do I find grants from my small business, and how do I qualify for the grants? Just to answer that in one question, you can find grants at government agencies, state organizations, and private corporations, like the NGOs that Paul talked about. And the qualification will mostly depend on the awarding organization and where their priority is. For example, they could be giving priority to businesses in low-income areas or rural areas, or a specific group of people, maybe like women or the youth. So having said that, I hope you can see my screen. Rachel, are you able to see my screen?
No, we are not able to see your screen. Can you try to reshare?
Okay.
Yeah, now we are good. You could just put slideshow.
Is that okay now?
Yes, that's great.
Thank you. So I just jumped right into it, and I was not going to talk generally about grants, but specifically on how you can access grant through the We Do project which we are currently running with JZ. So like I said, I'm from ASEC. Just to briefly introduce ASEC. ASEC is the Association of Startups and SMEs and Developers of Kenya, which is an association that represents the interest of organizations supporting the development of startups and SMEs. And just to mention, it comprises of organizations such as Biashara Africa, who are doing an amazing work, empowering and accelerating small businesses to create sustainable livelihoods and employment opportunities. Just so you know, Biashara Africa is also a member of ASEC. I had to mention that. Yeah. So when WIDO came to Kenya, they were looking for an implementing partner. So they picked ASEC as the implementing partner. And as we move on, you'll see how ASEC comes in the WIDO project. So just to, sorry. So the WIDO project is a project implemented by GIZ on behalf of the Federal Ministry of Economic and Development, that is the PMZ, and this is the German government. So basically the WIDO project is supported by the German government, and the money is actually German taxpayers' money. So like you remember when I mentioned that grants are also given by government corporations. So that's a very good example of that. So we do provide grants in connection with existing flows of money from Africa. Sorry. From private individuals who live in diaspora. And these are individuals who live in these countries that you can see, but we talk about them as we progress. So what WIDO does is that WIDO leverages on diaspora remittances to support micro and small enterprises in participating African countries. And in this case, we talk about Kenya. We also get to know which other participating African countries. So WIDO is in two aspects. They give grants, which is financing, and WIDO also provides business coaching to the entrepreneurs within the WIDO project. So in this project, GIZ focuses on financing, while ASEC will focus on the business coaching and mentoring. So basically, ASECs are the ones who provide coaches to the entrepreneurs through our membership. So once, and we've said that WIDO South Africa is an online platform. So once an entrepreneur applies for a WIDO project through the WIDO Africa platform, and that project is approved by the GIZ team, that project will be sent to us, ASEC. Then ASEC will assign a coach to that entrepreneur, a business coach to that entrepreneur, depending on the location of the business. And also we look at who is the nearest coach to that location. The two main aims of the WIDO project, one is to increase household income, and two is to create employment. And how did WIDO come about? So we have Africans living in diaspora who normally used to send money back home. Even now they're doing the same, but the money is just used for consumption. So the idea why WIDO came in was to have these people who normally receive money back home just for consumption, put that money into starting businesses so that they become self-reliant, and also in the process, the projects can create an employment for 1, 2, 3, or 4 people, depending on the nature of the project. So the next question will be, how do I access WIDO grant, or how do I become a WIDO entrepreneur? So we have the Kenyans who are living in diaspora. So when we talk about the diaspora, we're talking about Germany, France, Switzerland, Austria, Belgium, Sweden, and Norway. They are the ones who identify the person, either a friend or a relative, back home whom they would like to support, start a business. Or probably someone they have been supporting on a monthly basis, and the money is just used for consumption. They decide that now I need to start a business so that I become self-reliant and we stop the issue of sending money every other month. It also eases the burden of the other person in diaspora. So this, the Kenyan living in diaspora, the one who identify the person they want to support back home. And then after that, they will log on to the WIDO platform and create their profile as a donor. And then after that, they will invite the person back home, the person they want to support, through a link. And it is through that link that the person back home will be able to access the WeDo platform and also create their profile as an entrepreneur. And also through that is where they'll be able also to upload their business plan. So when we talk about WeDo and business plan, they normally is not complicated. They have the project description, what the entrepreneur would like to do, and the budget. That's what we call the plan of how they will use the grant for the business. So these are the countries where if you have someone in those countries, then they're able to help you access the WeDo grant. And the participating African countries are Kenya, Ethiopia, Ghana, Cameroon, Togo, and Tunisia. So we don't know which country this might go next, because on both ends, in Europe and Africa, it keeps expanding. So maybe we are hoping that maybe in the near future, we'll get more countries in Europe participating, so that, because we have people in other countries, but they're not at the moment they're still not participating, and that I think has been the challenge for most of the Kenyan entrepreneurs. So when we talk about the WeDo course, basically these are the projects that we've had so far. So WeDo came to Kenya in November 2020. And the main project within the WeDo project, the original WeDo grant, is the one that started in November 2020 up to now, and is still ongoing. And we are hoping that it will be there next year, but one, I cannot say for certain, because it is a GZ project, it's not an ASEC project. We are just implementing partners. So there's something that I cannot say on their behalf. So for the original WeDo grant, that's the process. So you need to have someone in diaspora log into the platform, and then inviting you to the through a link. So for the original WeDo grant, WeDo gives grants from 250 euros up to a maximum of 2,500 euros. And please remember, they're just grants, they are not loans. And then how does it work? So once the donor and the entrepreneur agree on the project that the entrepreneur wants to do, and that's what they upload on the platform. I use an example. For example, if the budget for the entire, if let's say take the maximum 2,500 euros, basically it's like 300,000 or 350,000. Then how will WeDo come in? WeDo will give a matching grant in terms of, if the budget for the projects, for example, 700,000, the donor and the entrepreneur are supposed to finance it halfway. Donor finances 25%, entrepreneur 25%. If we use the example of, let me say 600,000, for example, it will mean that the donor and entrepreneur will have to contribute 300,000, so that WeDo can match that with another 300,000. So this 300,000 between the donor and the entrepreneur is supposed to contribute 150,000, the donor 150,000. And one of the reasons why they decided that the entrepreneur also needs to contribute is to increase the level of responsibility. Because once they put in their money, they'll be, they don't want to see their money go down the drain like that. And then again, once this money they will not give to anyone. What the donor is supposed to do is to send the entrepreneur the 150,000. We assume the entrepreneur has their own 150,000. Then this budget of 600,000, it will be split into two. So that half of it will be financed by the donor and entrepreneur, and then the other half by the grant that WeDo will give. So how does it work? So once they have their money, the entrepreneur will first invest their bit, which is 20,000 according to that plan. After they do that, then the coach WeDo team will verify that they've actually invested 300,000. So entrepreneurs' money now we want to see Even the donor's money, the donor will send directly to the entrepreneur. Then once it's verified that they actually invested 300,000 according to the plan that was approved by WIDO, then WIDO will also give the remaining 300,000 so that they can complete the investment. So that's the original WIDO grant. Secondly, WIDO also realized that we also have Kenyans who would like benefit from this grant, but they do not have diaspora connection. So what WIDO did in last year from December, there was a pilot project for Green Call. We call it the Green Call project. So Green Call were basically businesses that focused on developing sustainable green projects around circular economy, green digital solutions, green energy products and services, and so on and so forth. So for this project, the ticket was a bit higher. It was up to 5,000 euros. And the good thing with that project that it did not require diaspora connection. Secondly, the ticket is higher. And then the third thing, you see, for the regional WIDO grant, it is shilling to shilling. We do matches, 1 shilling with another shilling. But for the Green Call, it was 1 shilling to 2.5. That was the ratio. So that if the entrepreneur invests 100,000, then we will give them 250,000 as a grant. And then after that, we also had another call, we call the food security, which was only open for 2 weeks in April, 1st to 15th of April. After that, it was closed. And for that, again, the grant, it was the same as Green Call, where it's a local call, no diaspora connection. You just log in from here and then apply. Again, it was 1 to 2.5. But for the food security, we even went ahead and gave up to a maximum of 4,000 euros, depending on the innovativeness of the business. So if you do so a very innovative project, they would even advise that you put in more and they give you more. And then also, we are looking forward to JZ is working on another local call, which will be called the Women Call. And it is scheduled to start from next year in February. That's when it's coming in. But the info sessions will begin from January. So kindly look out for that. If you don't have a diaspora connection, look out for that. It's a local call. And that also answers the question that was asked by Wycliffe from Narok, was asking about some of the members of society who are able differently, if they can also get grants. I think this local call is open to everyone. It is much easier to access because it does not require a diaspora connection. So can look out for that. And also if you're working with Biashara Africa, keep in touch, because we'll be sharing this information with them and then also be sharing with their network. So don't let that pass you. Also, like I said, besides the funding, we do also offer business coaching. So like I said, once a project has been approved, we will also assign that project, that entrepreneur, a business coach. And that business coach will work with the entrepreneur through the journey of implementation of the business, and also from the word go. Because what we do is trying to do is support businesses that are sustainable. So the business coach is a professional in that field. So they will work with the entrepreneur from day one through the implementation of the project until the project is fully implemented. So in a way, also, we do is supervising the implementation of the project. There's a time that you asked that, so what's so unique about the WIDO project? Because people get funding all the time. And so when people hear about the coaching aspect of it, then it makes it different. And this is one of the things that are actually given the Kenyans in diaspora confidence to invest in their friends and relatives through the WIDO, because then they are sure that the project, once approved, will be implemented. So business coaching basically, like I think presenter mentioned before, The entrepreneur taken through financial literacy, record keeping, which is very important. They're taken through the terms and conditions. And then they're also taken through the BMC, the business model canvas. And one point to note is that the business coaching normally happens at the site of the business. Even if you're in Nairobi and you have a project back in the rural, when you are assigned a coach, you'll meet at the project site where the project is supposed to be allocated. The reason for this is so that the coach can also look at the environment and see whether that kind of business you want to start will thrive in that kind of environment. And can remember that for the grants and even for the business coaching, WeDo offers free of charge because WeDo pays for the business coaches. So there's nothing that the entrepreneur or the donor will pay to WeDo for this. And it's frozen. So just to mention, currently since November 2020 up to now, we've supported and are supporting over 800 entrepreneurs all over the country. And so it's the coaches who normally go to the ground to meet the entrepreneurs, to do the coaching, and then also to send the report, which they just upload on the WeDo platform. So over and time again, both ASEC and GIZ, we also do site visits, just for quality checks to confirm that actually the reports that we see are actually the reality. So what we are seeing is a true reflection of what is on the ground. This also to confirm that the proper coaching is taking place on the ground and also for purposes of transparency. So at times, as said, we do it on our own. Sometimes GIZ does it on their own. At times we do a collab, and this also using that aspect of transparency. For someone to apply for a WeDo project, you do not need to know anyone. For you to qualify for the grant, you do not need to know anyone. Because like we said, it's an online platform. The entrepreneurs apply it online. It is approved online. They are informed by email that the project has been approved. The only time they will get in touch with someone from WeDo is now when the coach is sent for the first coaching visit. So we normally do 3 coaching visits. Immediately the project is approved. We send a coach to do the verification because everything has been online to actually verify that the entrepreneur exists, the business site exists, the details of the entrepreneur, the platform are actually correct, and then also that's when they start the first business coaching. Rather, the entrepreneur is given a go-ahead to invest their money. We call it joint investment. The entrepreneur and the donors bid. After that, the entrepreneur will upload the receipts on the platform again. Then we will send a coach to the ground, confirm that the receipts of what they uploaded on the platform actually are on the ground. If they say we'll buy 2 chairs, yes, here the receipts were the 2 chairs. Then if everything checks out, then the grant will be approved, and then they'll be sent the money, and then they will invest the grant, upload the receipts on the platform again, and then a coach will be sent again to confirm that actually they invested according to the plan. But also every time a coach goes back, they try to identify any other coaching needs, and then they continue coaching and mentoring the entrepreneur.
Yeah, thank you so much, Maurice. We have 2 minutes left.
So those are just examples of the projects that we have, and when we go for the visits, a rice farmer in Busia, Budalangi, someone having a shop in Ruiru, a chicken farmer in Tarakaniti, someone having a wedding shop in Uasin Eldoret. So those are just examples of some of them that we've had. I think that's it from my end. So I welcome any questions and
Great,
comments.
great, Maurice. Thank you so much. I'm just wondering whether you'd project the website where they apply. Yeah, the WeDo.Africa.
.Africa website. Let me see.
Yeah.
And then also, as I do that, I have typed my email address on the chat. So if anyone would like to get in touch and probably know more about WeDo, you can send me that.
Yeah, a number of us are asking whether we will share this. We're actually recording and we're also live on Facebook. So even after this, if you want to rewatch this, you can go to Facebook. We'll also be uploading this on YouTube and we'll send you a link. Our Facebook page, you just search Biashara Africa and you'll find us there. So I would like to allow Maurice.
Yes.
To project the site.
So this is the WeDo.Africa site. So actually it is self-explanatory. It's very easy to understand. It has every information that anyone is looking for. So application on this website is very easy. It's very user-friendly. Are you able to see it?
Yes. We can see the website. Yeah.
It's very easy. And then just to get very quickly what's all about, you can go to the FAQ section. And then here, all the questions you have, what is WeDo? Then you have your answer. How does it work? You have your answer. Am I letting you take part? You have your answer. So it's very user-friendly and very straightforward.
Okay.
Yes.
Thank you so much, Maurice. We'll definitely keep our entrepreneurs updated when the call is open. But in case you have someone in the diaspora, you may possibly try it out. Yeah. And when the local call is open, we'll also have an information session. Maurice will invite you to help our entrepreneurs and guide them and share information on how they can participate in the call. So we'll keep tab of the same. Now, our final session and what you've been asking is on debt. And I want to ask Benson to prepare to take us through the session. As he does that, in case you have a question, feel free to put it on the chat. You can introduce yourself if you didn't get an opportunity to do so at the beginning. You can do that on the chat. In every session, we'll be giving 5 entrepreneurs an opportunity to introduce themselves and their businesses, how they can be reached, and also to ask questions directly to the facilitators. So today is our second session. We have 4 more sessions to go. Next week, we'll be talking about managing customers and customers' debt. Now, Benson, I hand it over to you.
All right, thanks, Rachel. Good morning, everyone. I know it's a few minutes to afternoon, so I hope you're all well. It's been an insightful session. Of course, happy to be here. Learned a lot, about grants, about equity, and the other financing options we have out there for small businesses. I'd love to acknowledge the presence of Eugene. I'm here with my colleague, Eugene. If you can just maybe take 5-10 seconds, just quickly introduce yourself, Eugene.
Hi, Benson and my team. Thank you for the opportunity. As mentioned, my name is Eugene Amwai. I work with Benson. I'm a business development associate, and I'm here to support you through. I'll be listening in, and thank you so much for the opportunity. Looking forward to more learnings together. Thank you so much.
Great, thanks, Eugene.
Thank you, Eugene, and welcome.
Absolutely. So Eugene will help me hold the fort of the Q&A. So when you get to a point where we need to answer the most intricate questions, Eugene will help with that. So Rachel, without further ado, if you'll allow me to share my screen.
Yes. You should be able to share.
Absolutely. Thanks. Let me just.
As Benson shares his screen, Maurice, someone is asking you to share to reshare your email address on the chat.
Okay, I'll do that.
Yeah.
Oh, so all good?
Yes.
Right. So I'll just start with a quick introduction of who we are. There's some noise somewhere. Not sure. All right. Thanks, Rachel. So I'll just start with a quick introduction of who we are as Biashara and what we do. So let me just give you a quick context. So Biashara comes from the word pesa and wezesha. Basically in Swahili, that means capital enabler. So of course, pesa is money, right? So what we basically do is we are capital enablers for MSMEs. And in a nutshell, what that means is we act as a link between MSMEs and affordable working capital. And we do this across sub-Saharan Africa, currently in 3 countries. That's Kenya, Uganda, and Ghana. And so, of course, we like to pride ourselves as the financial voice for MSMEs. So the whole idea is to help these underserved and unbanked, small businesses within these ecosystems to grow sustainably using debt. I know, Laban, Paul, and all the brilliant guests here have talked about the various financing options that we have, and why or at what point would you need either of those financing options for your business. But for us, we specifically focus on debt, and this is debt to MSMEs, all right? So we don't fund individuals, we don't fund consumers. The first qualification, of course, for you to be able to access this type of financing from Biashara is that you need to have a business. All right. So we deploy risk-based financing. I know this is just a term, I'm throwing it out there, but I'll get to demystify it more as we continue, just to help you understand what is risk-based financing. How does that affect you as a business owner? How does that affect your business? And how does that affect your chances, of accessing credit from Biashara or any other lender? All right. So we have more than 10 years combined experience in this field. We've been doing a lot of lending, to businesses. And so, of course, that only shows that we've got the necessary experience to be able to assess and evaluate businesses for credit or debt. So far, so good. We've been able to fund close to 30,000 MSMEs across the 3 markets that we operate in. And we've been able to also disburse more than 150,000 loans to these various MSMEs, all right? I think also good to note is that we are a licensed digital lender by the Central Bank of Kenya. So everything that we do, right, from interacting with our customers, from funding you that loan, should you qualify, from us collecting this loan from you, all this is based on the spirit of compliance because we are a regulated entity. So I'll just jump right into my main focus point, which is access to credit for small businesses. And of course, there's a statement there that so far, since the idea of a small business, came about, there's still a huge challenge for these MSMEs to access credit. And currently in sub-Saharan Africa, the market that we serve, we're looking at an SME financing gap of around $600 billion. I know that amount sounds huge, but I'll be able to narrow it down in the Kenyan context, which is 2.3 trillion Kenya shillings. That basically means every year, in all the MSMEs that we have in Kenya, the ones that look for credit, we still have a gap of around 2.3 trillion Kenya shillings. And that's a huge figure, we can all agree. So what are some of these challenges that small businesses face in accessing credit? Of course, number one is, and that's why for us, we are calling them underserved and unbanked, all right? Because most of them, if not all, find challenges in accessing financing from traditional financial avenues like commercial banks. And the major reasons for this is something we call information asymmetry. It's because, as a small business, when you go to the bank, you'll definitely be asked for a lot of things, right? And I'm glad that, the brilliant guests who spoke before me, most of them talked about record keeping. And that is one of the main things that these commercial banks look for, all right? Because if you cannot show that you've been keeping records for your business, then that basically means you probably don't understand your business, all right? And so I know that's one of the main challenge for MSMEs. The other thing is, for small businesses, you have evolved in the informal sector, all right? And in the informal sector, there are different dynamics, there are different nuances. So once you've evolved in that ecosystem, and yet you go to a traditional banking system or financial institution to look for a business loan, it becomes a challenge for you to access such type of financing due to those limitations. Of course, the other key one is lack of collateral and credit history hurdles that act as barriers of entry. Most commercial banks, if not all, ask for collateral for whatever amount, right? And that's why right now you're seeing more commercial banks are trying to pivot towards risk-based pricing. Now, risk-based pricing is not a new thing in the industry. This is something that we as fintechs or digital lenders have been doing for quite some time. It's when the banks are just trying to catch up. So risk-based pricing basically means, as Laban puts it, the amount or rather the credits that this financial institution will offer you is commensurate of the risk that you pose as a business, all right? And so what is the risk in this case? One of the things they look at is what is your credit worthiness? And basically that means from the loans that you've borrowed before, right? Have you been a good borrower? Have you been a bad borrower? That is what it basically means in a nutshell, all right? So if you go to a financial institution or if you go to a lender and you have a bad credit history or a bad payment history for your loans, then definitely that will pose a challenge, when it comes to you accessing credit, all right? The other thing is, of course, there is little or no information, or rather most MSMEs have little or no information on the various financing options that are available to them, especially when it comes to credit, right? And that is why there's a lot of misconception. There's a lot of myths around loans, around business loans, around consumer loans, and all these make most of these MSMEs to shy away from actually taking up loans, for their businesses, right? And of course, the other thing is the high interest rates and the stringent requirements that we just talked about, that most, if not all, commercial banks, ask of these MSMEs or of these small businesses before, you are able to access any credit from them, right? So the other thing is, why do you need credit as a business? All right. The other thing is also, do you need credit as a business? But of course, capital is key. And, as Laban puts it, capital is the funds that are available to a business for, running the day-to-day operations. All right. And so one of the things that credit helps you with as a small business, of course, is to improve your cash flows. Right. And basically, we all know that cash flow is money in and money out of your business. Right. So as a business, you could either have a positive cash flow or a negative cash flow. A positive cash flow basically means more money is coming into your business than money going out, right? A negative cash flow basically means there's more money going out of your business than money coming in into your business, right? So for an MSME, that is a micro, a small, and a medium business, credit can act as a lifeline, to address these short-term expenses that your business may face. And these are things like, working capital, things like payment needs, things like restocking, especially for, for Dukas or the kiosk, the small retailers, etc. All right. And of course, credit could be one of the alternative financing options that could help you to scale up your operations and increase your productivity. Not all businesses are able to bootstrap. And by bootstrap, I mean you are basically reinvesting or plowing back your profit. Not all businesses are able to do that. Not all businesses are investment ready in terms of equity. And not all businesses are also investment ready in terms of grants, right? So you might find that the only option you probably have access to is credit, just because you've been keeping records, just because you've been operational for some time, just because you found a lender, for example, Biashara, who is more concerned, or rather more focused about the MSMEs, the small businesses. So hence, they are likely to engage you, just because you're a small business, right? And so what are some of these misconceptions that people have about business loans, right? And I know some of these you've either experienced or you've had people talk about them, right? And of course, the key one for me is that business loans are too expensive and risky. That is false, right? Because all this is dependent on, first, your financing need as a business, and number two, how ready are you to take up this debt capital in this context, right? So if you go to a lender and one of the requirements is you need to have kept proper records, and you don't have proper records, right? Chances are they either won't fund you, or if they end up funding you, the label they might put on your business is that you're a risky business. And if you're a risky business, then definitely you get a high interest rate, all right? So it's not a one size fits all. So when you say you won't take up loans, or rather you can't take up loans because loans are too expensive and risky, that is indeed a misconception, all right? The other thing is that business loans are only for large and established businesses. No, as we've seen from the presenters from Deloitte and Michael, there are various financing options for various cadres of businesses. All right, there are financing options for micro businesses, for small businesses, for medium businesses. Right. So I think the whole idea is, the question is, where are you looking? Do you know the right places to look, right? And even as you do that, are you investment ready? Are you ready to take up this debt capital from this lender or from this financial institution that you're looking to access this capital from, right? And of course, the other thing is that business loans are hard to access and qualify for. That is not true. Number one, it's because you have the information on your fingertips. You have the internet. I mean, right now, if you go to Google and just search small business loans in Kenya, you'll get a variety of them, all right? On the question of qualification, it's you who knows your business better, all right? If you come to me as a lender and ask me if you qualify for a business loan, of course there's a criteria, right? There's an assessment criteria, and it's nothing out of the ordinary. And most of the time, it's simply, do you really have a business, all right? Are you registered or not, right? Have you been keeping records, etc., all right? So, of course, the other thing that I know has been talked about so much is the issue to do with credit worthiness. And of course, this is one of the things that we look at as lenders, all right? So the question is, in layman language, the question is, if you've taken loans before, either for your business or for your individual users, how did you treat that financial obligation, right? Did you take a loan and disappear? All right. Did you take a loan and defaulted on your first installment? Did you take a loan, paid your first 2-3 installments, and then disappeared? That is what we basically mean by credit worthiness, right? So the credit score in this case is just basically a numerical representation of your behavior as a borrower, all right? So that basically means if you have a bad behavior as a borrower, if you're a bad borrower, you'll definitely have a low credit score, right? If you are a good borrower, you'll definitely have a high credit score, all right? And so these are one of the main things that are factored in, right, when lenders want to assess or determine your risk, right? Because if you're a bad borrower, it means you're a risky borrower. It means if I give you my money, chances are it won't come back, right? So how do I do that? How do I handle that? Number one, is either I don't give you that money completely, but if I end up giving you this money, I will charge you very high interest rates, right? I'll charge you very high interest rates. Yes, so of course the other thing is so now that you know that, the idea is to ensure you build a positive credit score or a positive credit history. And how do you do this? I have some points listed here. Number one is you need to be able to establish and maintain a positive credit history, because of course this will be vital for you to access not just larger loans, as I've put it here, any type of financing, any type of debts. All right. So it's your responsibility as a business owner to actually be conscious and fully aware, about your credit worthiness, right? So at this is one of the points whereby I tell business owners, do not gamble, All right, this is not information that you think about it when you need to apply for financing. No, this is something that you should be consciously and constantly aware of, right? Because you might need debt financing in 1 year, right? But that doesn't mean you'll wait for 1 year for you to start building a positive credit score, right? So these things are compounding, these things are cumulative, right? So if you start building your credit score, let's say beginning January, by the time you're in December, for example, you have a very impressive credit score, and you probably qualify for a higher amount than what you might necessarily need at that particular point in time, right? So how else would you build your credit score? Of course, number one is if you've taken debt for your business, it's your obligation, right, to ensure that timely payments have been made, all right? And should you foresee a situation whereby nowadays lenders are actually, very empathetic. I'm actually speaking from a possessor's point of view. Lenders are very empathetic in the sense that should you foresee a situation whereby you're likely to delay on your payments and you reach out to them, they will definitely understand, right? I mean, these companies are not being run by robots. They're being run by human beings like us. And if we're claiming that the whole idea is to help MSMEs grow, and then you reach out to me and you tell me, I don't think I'll make my first installment on time, and I deny you that opportunity, then I'm definitely doing the wrong thing. I'm definitely in the wrong industry, right? I should definitely be doing something else or putting my money somewhere else rather than claiming I want to be the financial voice for MSMEs, yet that is not what I'm doing in practice, right? Of course, the other thing is as a business, and I know Rachel and Biashara Africa, you're doing a great job, in educating MSMEs around, things like debt to income ratio. How do you maintain a healthy debt to income ratio, right? How do you ensure that money that is coming in terms of, because of course debt is a liability, right, is at par to what you're earning, right? Because if you take more than what you're earning, definitely you'll become over indebted, right? If you become over indebted, that is financial distress for your business. When you get to that point, it means your business itself can't handle its obligations, right? So when it gets to a point that you need to pay your loan, you won't be able to pay your loan. Why? Because you took 100,000, for example. That 100,000 is not giving you immediate returns, right? The income that you're getting month on month is not proportional to your debt obligations in terms of installments, and that's how financial distress kicks in, right? And of course, as I've said, having a good or a solid credit history will definitely open more doors for more opportunity, and not just debt, right? As you had, our brilliant guests from Deloitte say, I mean, even if you're seeking equity funding, for example, they have to do a due diligence. And one of the things they look at is what's your history with debt, right? So maintaining a good credit history is not just good for you or beneficial for you to access a debt or a business loan. It's good for you to access all the other types of financing, right? So of course, the question now is, what are these now various types of debt financing options that we have for MSMEs, right? Of course, as we had earlier, we have commercial banks. Banks like KCB have financing solutions specifically catered for MSMEs. So it's called the KCB Biashara loan. And of course, they're just specifically tailored for small businesses. And most of them cover working capital. Let's say you want to purchase an equipment, etc. Of course, one thing to note about this kind of loans, even though they're specifically tailored for businesses, they have a very strict eligibility criteria, and that is why many a times it's only the small and the medium part of the MSMEs that get to qualify for these loans, right? The other option, of course, we have digital lending platforms, like Biashara Africa, and this is whereby more innovation is coming in, right? Previously, banks have been stricter. Some of them have refused to innovate. Some of them have refused to plug in small businesses into their financing ecosystem, and that is where fintechs like Biashara Africa come in, right? So we are not coming in to kick out the banks. No, we're basically coming in to fill in this this gap, that commercial banks have left when it comes to MSME financing. All right. So right now we're talking at an MSME financing of 2.3 trillion Kenya shillings in Kenya. Banks won't feel that. They might not be able to fill all that gap. Right. So that's where we plug ourselves in with our quick and of course easily accessible financing solution for MSMEs, from working capital, from stock financing. Do you want to purchase an asset? Do you want to restock for your business? Do you want to pay your suppliers, etc.? Right. And given that we are technology companies, it means we've also reduced friction from the application process, for you to be able to access this type of financing. So the other thing, of course, we need to ask ourselves, now that we have context, now that we get the gist of it, right? So before you seek out a loan for your business, what are some of these things that you need to put in mind? Number one point that I have for you today is, of course, even though the lender might not ask you for this, but it's good for you as a business owner to have a comprehensive business plan. And within this business plan, you've outlined your goals, your strategies, and how this loan that you intend to take will contribute to the growth of your business, right? Because if you don't have this, that's where we have something called cash diversion, right? Yes, indeed, you qualify for 500,000 shillings from that particular lender, but you know very well you have no intention to use these 500 shillings on your business, right? You divert this cash for personal use. You divert this cash for whatever other reasons besides injecting it, or rather making it form part of the inflows of your business. Once you do that, trust you me, you're going to be in a very, very, very tight and bad situation. All right. Of course, the other thing is you need to be able to provide accurate financial projections to demonstrate the viability of your business and your ability to repay the loan. And I know this might be a hard task for most of MSMEs, and I think that's why also as Biashara, with our partnerships with guys like Biashara Africa and other partners, we provide such trainings for free, right? Because you might have all this in theory, it's probably just textbook information, but how do you ensure that you plug this in to your day-to-day operations as a business, all right? Of course, the other thing is
Benson,
we need to
we have less than 10 minutes, including Q&A.
No worries.
Okay.
Yeah. I think heading to the tail end of it, yeah. Right. So, of course, the other thing is, should you have identified a lender? Of course, one of the most important things is even if you don't end up getting funded by that lender, you need to be able to communicate with them. All right. So pre you getting funded, you need to understand what type of lender you're dealing with. Number one, are these lenders licensed? Right? Because that's the only way the regulatory bodies will be able to maybe protect you from, let's say, harmful practices by various lenders, should you get to a point whereby you're so distressed or just due to unavoidable circumstances, you're not able to immediately meet your debt obligations, right? And great. So, of course, the other thing is, how now do you ensure that at least you have hope that if you approach a particular lender, you're able to access this credit, or rather you're able to improve your chances of accessing credit financing from this lender? Number one, maintain accurate financial records. This is a no-brainer. If you're running a business and you don't keep records, you probably should be doing something else, right? But before you do something else, this is information we are giving you, right? And we'll be able to help you maintain these records, all right? So that's the whole idea. You need to maintain accurate financial records, right? Of course, number two, just improve on personal and business credit scores. If you have any outstanding loans with any data that you have right now, before even thinking of taking any other loan, this should be your first priority. And don't take a loan to pay a loan, right? So if you know you have a debt obligation somewhere, your lowest hanging fruit should be to clear these debt obligations before taking any other debts, right? And of course, the other thing, as I said, build relationships with these lenders. Don't take a loan, from a lender and just disappear, and the next time you're talking to the lender is when you want to pay. No, engage them, right? Because with this engagement, you never know. You might just get more favorable terms. You might get reductions in interest rates. I know these things hardly happen, but that's the whole essence of having this communication with these lenders, right? And of course, demonstrate potential for growth. The whole idea is, if you can show me as a lender that indeed you want to use this money to grow your business, then I'll definitely be confident in giving you this money, right? And I'll help you, hold your hand, grow, to the highest levels, right? Of course, last but not least is be prepared to pivot. This does not necessarily apply to loans, specifically, but the whole idea is, when you face a challenge as a business and you have obligations, it's your responsibility to speak up. It's your responsibility to find exit strategies. And an exit strategy is not switching off your phone and running away. An exit strategy in this context would be to talk to your lender, talk to a few people maybe who have experience, right? And find the most amicable solution to solve that particular problem. And so, of course, at this juncture, I'd want to introduce what we do at Biashara. As I said earlier, we are an MSME capital enabler. So we connect MSMEs to working capital loans, all right? And maybe just a quick run through. Within our ecosystem, we are able to fund MSMEs loans ranging from 10,000 Kenya shillings to 2 million Kenya shillings. Loans from 10,000 Kenya shillings to 200 Kenya shillings are unsecured, so that means you don't need any sort of collateral to access them, all right? But loans above 200,000 to 2 million Kenya shillings, these are secured loans, secured facilities. That means you need collateral. But just due to our innovative nature, we came to realize that not all MSMEs have immovable assets, to put up as collateral. And that's why for us, we also take stock as collateral. We call it soft collateral, and very many other alternative ways of guarantees, just to ensure that if indeed we've identified that there's a financing need in your business, and truly this facility will actually help you grow your business, we actually invite you to talk to us, right, and find the best way that we can fund you. Right. And of course, as you can see, the middle section of the screen, robust credit scoring. What that basically means is we have our own internal engine that helps us determine your credit worthiness. Right. And so this is the result of millions and millions of data sets that feed into this model. And what that basically means in layman is, by the time we are giving you a particular interest rate on a particular loan, we have the most accurate credit decision regarding you as a borrower. Right. And of course, one other thing that we do is financial education. We believe that educated borrowers are better borrowers, right? And that's why once we onboard you on our ecosystem, we give you a chance to learn, all right? We give you a chance to learn the basic financial skills that would actually ensure that you realize that you have an obligation. Right, this is debt. It's not a grant, and that you'd have to return it with interest and maybe any other associated fees that come with it. All right. So the other question is, of course, why choose Biashara business loans? As I said, those are our loan amount ranges. We're also giving you an opportunity to repay this amount up to 12 months, right? Some take shorter, some take longer due to unavoidable circumstances. And that is where our different recommendation initiatives come in, right? So should you get to a point whereby, just due to market conditions or things that happen, right? We are always ready to listen to you and give you an opportunity to restructure your loan to installments that would be favorable and would be flexible depending on the dynamics that your business is facing at that particular time. All right. So what do we need from you to qualify for a Biashara loan? We have two main channels. So right now we have digitized all our process. So of course, you would need to download our app. It's called the Biashara Marketplace app. It's on the next slide. I'll show you. Right. And once you download, this is not a, and I'm not bad mouthing anyone, right? But the process on our app is specifically catered for businesses, all right? So should you get a certain limit, it will be a limit based off of the information that you've provided us for your business, all right? So of course, you'll just need to download the app. you sign up, all right? And then the documents that you need to have ready with you is at least a 6 months M-Pesa statement. If you have an M-Pesa and a bank statement, we encourage you to at least have both in preparation for the application process. And what you can see at the bottom of the screen, those are our loan rates and fees. And just key to mention is we don't have a one-size-fits-all when it comes to the interest rate. And that again takes me back to the risk-based pricing model. So that means the interest rate that we charge you on your loan is commensurate on the risk that we've identified on your business. All right. And then of course we have a processing fee of 100. And in all this, I mean, given the ease of accessing this facility and the various financing options, we basically tell our customers that, you know, this processing fee, this 100 bob processing fee, just basically shows your commitment to the process. Because whether you qualify or not, we will still retain you in our ecosystem, educate you, help you become a borrower, help you build a credit score in our ecosystem, and maybe in a month or two, you'll be able to even qualify for a higher amount than what you were seeking for initially. So that's this basically is a process that I was trying to describe. Once you download our app and fill in your details and fill in your personal and business details, upload these documents that we are asking for, the M-Pesa statement, or if you receive payments via till, you can upload that. If you also receive statements by a bank, we can upload that. And the statement, or rather the financial document that gives us the highest score, that the highest limit rather, that is the amount that will fund you based off, right? Yeah, so basically that's it. I know I've rushed through it, so
yeah. Thank you so much, Benson. Some of the questions we'll be receiving, and
yes,
it will be great for you to answer, is why sometimes it shows a zero limit, why it does so. And then other times it encourages you to add your records like M-Pesa statements. So how one should go through that to improve their credit score. And if at all you upload those documents and your limit is still zero, what advice would you have to entrepreneurs? Thank you.
Okay, so I'll just maybe kick it off and then just throw the ball to Eugene. So ideally what happens is we also have a threshold of which a business owner can qualify for a loan, for Biashara loan on the app, right? And all this is informed by the financial documents that you upload, right? So many a times when you get a zero limit, chances are that you've not met the threshold, right? So we internally also have a score that ranges from 0 to 900. All right. And so for you to be able to get a limit, you need a score of at least 490. Right. So that means if we score, or rather, if you upload your financial documents, right, and your score is below the 490, that means you won't have a limit with us, right? Very few instances, we find that we have good borrowers, good customers, they have good statements, and they've uploaded them and they still get zero limits. On very few instances do we have such, and many a times that is just a technical hiccup. And what we normally advise our customers is they reach out to us, and of course for all the scenarios that we have like that, we've been able to solve such issues within 5 to 10 minutes. Right, but the main reason why you would get a zero limit is if you don't meet the minimum threshold for qualification.
Okay, thank you, Benson. The other question is around the repayment period on the app. I think it limits you to 30 days. Just to clarify how they go about that. Yeah.
I think Eugene can handle that. Eugene.
Right, thank you, Benson. So I'll respond to the question. You've mentioned that at times you'll find that you're restricted to 30 days. That's not it. What normally happens is that during the application process, an applicant is at liberty to choose which period they are comfortable or working with. So we have a threshold, or rather we have a provision for 7 days.
And these different repayment periods attract different interest rates. So you'll find that for 7 days, you are attracting an interest rate of 2%. So if probably, maybe let's say you are applying for a loan of 10,000 shillings and you feel like you want to pay within 7 days, that will attract a 2% interest rate. We also have a provision for 14 days. 14 days will attract an interest rate of 3.5%. And then if you are doing 30 days, it will attract an interest rate of 6%. So during the registration process, once you are done, you have attached every required document that is required, and you've submitted, you've gotten a credit score, and you have a loan limit, then you're at liberty to decide. You want 10,000 shillings based on the current need that I have, or I want 20,000 shillings, or I have a loan limit of 20,000, but I need 10,000 shillings, and I feel comfortable that this 10,000 shillings, I'll be able to repay within 7 days, or if not 7 days, I will be comfortable to repay within 14 days. So that's how it works. Thank you.
What about for entrepreneurs who want to repay within more than 30 days?
Well, now for this one, it will depend with the period. It will depend with the amount. Because at the end of it all, we are here to tailor-make solutions to specific problems that our members or entrepreneurs are facing. So now for this particular one, if you're applying through the app, it will be different, because if probably, let's say, from history, we've seen your repayment pattern that you've been paying on time. You've borrowed at, let's say, 10,000 shillings. You said you're going to pay within 14 days, and you did. We move again to you borrowed again 10,000 shillings for the second time. You pay within the required period. So in the event you're going to get a high amount, and let's say you maybe in the past you've borrowed 20,000 and you were to pay within 30 days, and you did so 3 times probably consecutively, then definitely you'll get to a place whereby if you want to borrow maybe let's say 30,000 and you want to pay within 40,000 and you want to pay within 2 months, we will always tailor-make such kind of a solution to a respective customer. However, what mainly informs such a decision is their repayment pattern, also how much they are borrowing at the same time, because if you're borrowing 10,000 and you want to pay within 2 months, then I don't think that will be very good business, because it will be overstretching the period, while at least not being quite resourceful for the customer. Thank you.
Okay. Thank you so much, Eugene and Benson. That was great. I'll be projecting our subsequent sessions. We meet every Wednesday, use the same link, same time. So we're talking about debt financing. Now, for the cases of Biashara, we've automated that process. So you'll not be sending us the verification documents like you used to send us. So everything will have to be done on the app. So from our end, we receive your application, we assess it. So for those who will qualify for Biashara, we also work with ABSA, Equity Bank, plus others. But for those who will qualify to work with or get financing from Biashara, then now we refer you to the app. So you go through the app. So for larger amounts where you need a higher repayment period, then that will be negotiated. Before the loan is approved, and Eugene, you could confirm this, you have to call the business owner, is it? Discuss the terms before the approval. Is that correct, Eugene? You're on mute. Yeah.
Sorry. So what happens is that through the mobile application, you are able to understand the terms and the conditions are very clearly spelled out. So you'll be able to understand that if I'm taking a loan of 10,000 shillings and I'm committing to a payment period of 30 days, you clearly understand the interest rate that loan is going to attract. You clearly understand the duration within which you're supposed to have done that. However, before we get to disburse the amounts or the funds to your M-Pesa account, we normally do a check. We want just to call you and find out if Eugene Amwai have applied for a loan of 10,000. I definitely have to call and confirm if really, because we are surrounded by different people people with different intentions. Somebody would have decided to pick a loan for you. So we normally have to do that check. However, if it's a direct SME loan, and maybe let's say you are borrowing beyond 200,000, then the procedure is different because their documents will require to take you through. So that one we do via email and will be in constant communication. So just again to add on it, in the event probably one is applying for a loan and that they're struggling somewhere, we'll always be at their disposal. So at the end of it, I know I'll share my contact so that I'm on standby, so that in the event anyone is having a challenge, they want to ask a question, we can just, instead of going through the long communication process, they can just reach me out instantly and I'll be able to guide them accordingly. Thank you so much.
Yeah, perfect. Thank you, Jean, for that. And then there's a field, you indicate the partner. So in our case, you select Biashara Africa so that we are also to give you support through Biashara. So we can see the businesses that progressed from the application or that have applied through our network. And if you have a challenge, you can WhatsApp us, reach out to us, then it becomes easier. So always remember under business partner to indicate Biashara Africa. Benson or Eugene, I would request that you put the link to the app so that those who want to download the app and
Hello,
you're breaking.
I think we've lost.
It's okay. I think I'll just take it up as she comes back. So currently what we have, we may not be able to guide you through a link because you're also still working on the web app. However, trying to speak. So yeah, if you want to get the application, you'll just go to Play Store, then search for Biashara Marketplace. I know we have 3 different Biashara there. You'll find Biashara Business, but you want to focus on Biashara Marketplace. Once you get to download the application, it's very interactive. It will be asking you for the information that you require. So if it's asking for your phone number, if it's asking for your name, first name, second name, it's just very interactive. But the point where now maybe you want you are having a challenge is when now you get to reach out. Directly, we're always on stand.
Hello. I'm not sure. I can't hear anything on my side. I'm not sure if it's my network or.
I can hear you. I can hear you.
Oh, okay. So maybe just to add onto the SMEs that are still in the channel, Deloitte is on the process of partnering up with Biashara Africa, and what you are looking at is Deloitte wants to leverage its internal. Alice maybe can mute herself. Okay, as I was saying, Deloitte is
go ahead, Paul.
Okay, so Deloitte is partnering up, is on the process of partnering up with Biashara Africa, and what Deloitte is looking into doing is to leverage its internal resources, which most of the time is its staff, and help SMEs become investor ready. A couple of presenters here have talked about becoming investor ready, and which is a key critical step in terms of your fundraising journey. If you become investor ready, then in terms of fundraising for your business, it's much simpler and it's much quicker, and you know exactly what the financiers are looking for. We will be providing business advice, mentorship, and those technical advice. So keep on the lookout for that, and I'd encourage the SMEs to apply. It is a very value add. What do you call it? It's a very value add session, and it will be very amazing for your business to join.
Yeah, thanks, Paul. And we really look forward to that. Yeah. So to our entrepreneurs, you have all the support you need. You've heard from our experts today, and a great conversation it has been. I think we don't have a question for now. Allow me to just highlight our upcoming sessions in preparation of even you qualifying and being ready to access financing. So we meet every Wednesday. Use the same link. You don't have to apply, please. And our next session, next week on Wednesday at 10, please be punctual. We'll talk about managing customers and customers' debt. A number of you have been asking for this. So, and we'll have organizations that help small businesses like yourselves to manage customers' debt. Instead of you giving the debt to the customer, then they offer the debt on your behalf and they pay you in cash. So we'll hear from them. The other week, 30th of August, we'll be talking about payment options. A number of you have also been asking, what is the easiest way of getting paid by my customers? So how do you manage your payments by your customers? We'll also have experts in that area. And then this has been spoken quite a bit even in today's session, record and bookkeeping. We'll also have experts in this area. This will be the 6th of September. Same time, you use the same link. And finally, managing finances as a small business. A lot of you have asked about this, and this is very critical. We'll have learned about making money, getting financing, managing customers, managing debt, and bookkeeping. Now, the final one will be managing finances as a small business. And today we were covering small financing options for small businesses. And please keep in touch, follow us on our social media platforms so that you also get quick updates. In all cases, we send updates via WhatsApp and emails. So even during these meetings, you must have received an email or emails and WhatsApp messages. So I will end there because of time. We've also been streaming this on our Facebook page. So if you check Biashara Africa, you'll be able to see this. We'll also upload this on YouTube and share the recording for you to rewatch. So thank you so much for being with us in today's session. Was great having today's discussion. Very insightful, and I hope you've learned a lot and now you will get financing. We'll keep engaging and having more discussions with our experts to ensure that you actually now have get financed and your business grows. So from our end, from Biashara